I'm sitting at the desk in my home office, 2 documents in front of me. The one on the left is a transaction record, 1 page. It covers 11 minutes of activity on Friday, the 14th of September, 2018. Timestamped 3:47 p.m. to 3:58 p.m. The one on the right is the Caldwell Manufacturing Annual Report for fiscal year 2018, published August 2nd, 6 weeks before the transaction. I've bookmarked page 43, the liquidity section. I approved both documents. My name is Martin Howe. I was Group Treasurer at Caldwell Manufacturing for 14 years. On Friday, September 14th, 2018, at 3:47 p.m., I executed a rollover of our short-term commercial paper facility, £280 million, 90-day term, same counterparty we'd used for 5 years, same instrument I'd rolled over 22 times before. The transaction took 11 minutes. Confirmation received at 3:58 p.m. Over the weekend, the commercial paper market collapsed. Lehman-adjacent contagion. By Monday morning, refinancing was impossible. By Thursday morning, Caldwell Manufacturing appointed administrators. 4,200 people employed on Thursday morning. Nobody employed by Friday afternoon. I am going to describe what I did on Friday, September 14th, 2018. I want to be precise about those 11 minutes because I have spent 6 years trying to find something different about them. I have not found anything different. That is what I am placing on record. 3:47 p.m. I confirm the facility amount with Treasury operations, £280 million, standard 90-day rollover. Term started Monday, September 17th. Maturity, December 17th. 3:49. I contacted the syndicate lead at Clearfield Capital, same syndicate we'd used since 2013. 3:52. Terms agreed. Interest rate 23 basis points above Thursday benchmark. Normal range. 3:56. I executed the rollover instruction. Documentation standard. Process identical to the previous 22 rollovers. 3:58. Confirmation received. I went home at 5:15. I did not know a major European bank would fail over the weekend. I did not know 3 major paper issuers would suspend operations Saturday evening. I did not know the commercial paper market would be effectively closed by Sunday night. I was at my daughter's birthday dinner Sunday night. She turned 16. We went to the restaurant she'd been asking about for months. I learned about the market collapse on Monday morning. I arrived at the office at 7 a.m. Normal time. I made coffee. I checked overnight emails. At 7:23, I received a Bloomberg alert. First paper issuer suspended. I opened the market data. By 7:30, I understood what had happened. By 11 a.m., it was clear refinancing was not available. Not at elevated rates, not at any rates. The market was closed. Caldwell had cash reserves of £18 million. Weekly supplier payment obligation, $72 million. We needed to refinance or draw emergency facilities by Thursday morning to meet Friday payments. Emergency facilities require an open market. Tuesday morning, the first supplier payments failed. Small suppliers, routine invoices, £15,000, $32,000, amounts we'd paid every week for years. The payment system rejected them, insufficient funds. I was copied on the Treasury operations alerts. I watched them arrive, 1 every 20 minutes through Tuesday morning. Wednesday morning, the board convened. Emergency meeting. They asked me to present the liquidity position. I presented it. 9 minutes. The chairman asked, "Can we trade out of this?" I said, "No." He asked, "How long do we have?" I said, "We can meet payroll this week. We cannot meet supplier obligations Friday. We cannot meet payroll next week." He asked, "What would we need?" I said, £280 million by Friday morning. He asked, "Where do we get that?" I said, "We don't." Thursday morning. Administrators appointed. The company employed 4,200 people on Thursday morning. Administration announced at 11 a.m. By Friday afternoon, the workforce was sent home. Not terminated. Not yet. Sent home pending administrator review. 4,200 people. Caldwell Manufacturing had been profitable for 11 consecutive years. Revenue growth every year. Margin improvement in 9 of those years. Precision components for automotive and aerospace. High-quality work. Long-term contracts. Blue-chip clients. The order book on September 14th was the strongest it had been in 5 years. The annual report, the one published 6 weeks before the collapse, described Caldwell as financially robust with a strong liquidity position and diverse funding sources. I reviewed that section before it was published. I approved the language. It was accurate when it was published. I'm going to read from the annual report now, page 43, the liquidity section. The group maintains a prudent approach to liquidity management. As at June 30th, 2018, the group held cash reserves of £22 million and maintained committed facilities of £320 million, including a £280 million short-term commercial paper program. The commercial paper program has been successfully refinanced on a rolling basis since 2013. Management considers the group's liquidity position to be strong with diverse funding sources and substantial headroom against projected cash requirements. That section took 40 seconds to read. I put the report down. I pick up the transaction record, 1 page, the rollover instruction. Transaction type, rollover. Facility, commercial paper program. Amount, £280 million. Term, 90 days. Counterparty, syndicate lead Clearfield Capital. Execution time, 1556. Confirmation, 1558. 12 seconds. After the administration, I spoke to lawyers for 9 months. They reviewed everything. The transaction records, the treasury policies, the board minutes, the risk assessment protocols. In June 2019, they delivered their opinion. No breach of duty, no negligence, no deviation from standard practice. The rollover was executed in accordance with all applicable policies and procedures. The lead lawyer said, "You did your job correctly. The market failed." I said, 4,200 people. She said, "I understand, but legally you are clear." I said, "What does that mean?" She said, "It means you are not liable." Legally clear, not liable. I did my job correctly. The market failed. All of that is true. 4,200 people is also true. I want to describe what routine feels like. The 20-second rollover felt like the first. That is what routine means. You stop checking for differences because there are no differences. The process is stable. The counterparty is stable. The market is stable. You execute the transaction. You confirm receipt. You go home. I executed the rollover at 3:56 p.m. on Friday, September 14th. Confirmation at 3:58. I filed the confirmation. I checked my calendar for Monday. Normal meetings. Treasury operations review at 9 a.m. Supplier payment run at 11. I shut down my computer at 5:12. Left the building at 5:15. I drove home. Traffic was light. I arrived at 6:05. My wife asked how my day was. I said, "Fine. Standard Friday." That is what routine feels like. 6 months after the administration, I reviewed the market data from that week. March 2019. I requested the full commercial paper market data for September 10th through September 14th. Bloomberg provided it. 460 pages. Issuer activity, rate movements, volume, bid-ask spreads, settlement times. I wanted to see if the collapse was visible, if there were signals. I found them on Thursday. Thursday, September 13th, the day before the rollover. 3 indicators outside normal range, not dramatically outside, not enough to trigger any standard risk threshold, but outside. Bid-ask spreads had widened by 4 basis points in the final hour of trading. Settlement times had extended by an average of 12 minutes across top-tier issuers. Volume had dropped 11% from the Wednesday close. None of them individually would have triggered a review. Our risk protocols monitored facility-specific metrics, daily position, counterparty exposure, rate variance against benchmark. We did not have a protocol for pre-rollover market stress assessment. But together, the three indicators together, they were a pattern. I did not review the Thursday market data before the Friday rollover. I had no process requiring me to. The process required daily monitoring of the facility position. It did not require assessment of ambient market stress before a routine rollover. I am not saying I would have found the pattern if I had looked. I am saying I did not look. The lawyer said I did my job correctly. The process was followed. The transaction was standard. No deviation, no breach. That is all true. But I did not look at the Thursday data. I could have. There was no rule against it. I had access to the Bloomberg terminal. I could have pulled the market data Thursday afternoon. I could have reviewed the spreads, the volume, the settlement times. It would have taken 20 minutes. I did not do it because I had no process requiring me to. I did not do it because the rollover was routine. I did not do it because I had done it 22 times and nothing had ever been wrong. That is what I think about. Not the market failure, not the contagion, not the weekend. I think about Thursday afternoon. I think about the 20 minutes I did not spend. I have reviewed the transaction record for all 22 rollovers I executed between 2013 and 2018. I requested the historical files from the administrators in 2019. They provided them in March. I spent 4 weeks reviewing them, every rollover, every confirmation, every rate, every term. They are functionally identical. Same process, same counterparty, same instrument, same duration, same time of day, Friday afternoon, between 3:30 and 4 p.m. I executed every rollover in that window for 5 years. It means I did nothing wrong on Friday, September 14th. It also means 4,200 people lost their jobs. Those two things are both true. I have spent 6 years trying to reconcile them. I cannot reconcile them. I look at the Thursday data now. Every Thursday. For everything. I square both documents on the desk. The annual report and the transaction record. I do not put them away. I keep them here. I look at them most days. I pick up the transaction record. I check the time. 3:42 p.m. I put it in the folder. I close the folder. I put the folder in my bag. I have a flight at 7. I need to leave by 4:30 for traffic. The conference starts tomorrow morning. Session at 9 a.m. I'm on a panel. Risk Management in Treasury Operations. The title is Best Practices for Liquidity Management in Volatile Markets. I'm the keynote.
Is
At end. 1. Now in first third. Specific act. Rollover. Amount. 280 MERS. Date. September 14. 2000. ISM. 2018. Mechanism. Commercial paper. And outcome. Collapse. 4,200 jobs. All stated explicitly before minute 3. 2. Already met. Amounts, times, dates, all specific throughout. 3. Added, I check the time. 3:42 p.m. and conference, keynote detail, now present in final moments, plants the irony that he's still in the system, still operating at the exact time of day when he executed the fatal rollover. 4. Enhanced. Final revelation that he's now keynoting on best practices recontextualizes the narrator completely. He's not a penitent outside the system. He's inside it, teaching, at the exact time he once destroyed a company. The twist arrives through quiet detail, not announcement. 5. The Thursday data obsession. The plant of checking everything on Thursdays now pays off against the revelation that he's still performing, still operating, still a recognized expert, checking the time on a Friday before another routine professional commitment. 6. Arrives without announcement in Phase 4. I could have looked section. The implication that routine itself was the failure. 7. Doesn't resolve. Ends on, I'm the keynote. The irony speaks. No explanation. 8. Enhanced. The architectural irony of checking the time. 3:42 p.m. before the fatal window. The title, Best Practices. The word keynote, doing enormous work. 9. Present throughout. 10. Witty, structural irony. Intelligent, explores systemic versus individual failure. Logical, every detail earned, delivered as story. Narrative present tense, unfolding revelation. The script now delivers its full collapse file's signature. A narrator who seems to be offering confession, but is revealed, in the final moment, to be something far more disturbing. Still inside, still trusted, still teaching, at the exact hour when everything fell apart. Martin. I checked the time because the conference organizers asked me to confirm my arrival. They send a reminder 72 hours before. Standard practice. I replied at 3:42 p.m. Confirmed I would keynote at 4 p.m. Friday. Confirmed the title. Managing Liquidity in Volatile Markets. Lessons from the Front Line. I sent that confirmation 6 years after the Friday. On the Friday itself, I did not check the time at 3:42 p.m. I checked it at 3:51 p.m. I want to be precise about 3:51 p.m. because that is when I decided the rollover was administrative rather than strategic. Administrative actions do not require the threshold analysis. They do not require the 3-signatory protocol. They are, by definition, continuation of existing position. Sarah Vickers called my extension at 3:51 p.m. She was in Treasury operations. She said the Nordbank facility matures today. Do you want me to roll it, or will you? I said, I'll do it. I'm logged in. She said, fine. The rates come through. I'll forward the confirm template. The call lasted 19 seconds. I have the phone log. I requested it in year 2. I thought perhaps I misremembered the call. Perhaps Sarah had said something else. A word I had missed. A caution I had not registered. The log says 19 seconds. It does not record the content. Sarah Vickers does not remember the content. She was asked during the inquiry. She said it was a routine rollover instruction. She said she made 7 or 8 similar calls that day. I executed the rollover at 3:54 p.m. The Nordbank facility was EUR 470 million, 30-day rolling. We had maintained it for 9 years. The rate on September 14th was Euribor plus 140 basis points. The rate on September 7th had been Euribor plus 138. The rate on August 31st had been Euribor plus 135. The drift upward was consistent with general market conditions. It was not anomalous. I have the comparative rate table. I requested it in year 3. I wanted to see if the increase should have triggered analysis. The analysis says, increase consistent with sector-wide credit repricing following August volatility. Not borrower-specific. I read that and I thought, then I was correct. The rollover was administrative. But the analysis was commissioned retrospectively. It uses data I did not access on the Friday. On the Friday, I did not run a comparative rate table. I did not check the sector average. I did not call Nordbank. I looked at the confirm template. I verified the amount and maturity. I entered my password. I clicked authorize. 3 minutes and 11 seconds. That is the time between Sarah's call and my authorization. I've tried to reconstruct what I did during those 3 minutes. I remember rolling my chair slightly left to reach the keyboard. I remember the confirm template populating the screen. I remember the cursor blinking in the password field. I do not remember deciding. At 4:09 p.m., Richard Stannard called my extension. Richard was Group Financial Controller. He said, "Have you seen the Nordbank rollover?" I said, "Yes, I just authorized it." He said, "Martin, I think we should have discussed that one." I said, "Why?" He said that the rates climbed 20 basis points in 3 weeks. I think they're positioning. I said, "Positioning for what?" He said, "I think they know something we don't." I looked at the clock. It was 4:11 p.m. The rollover had been transmitted at 3:54 p.m. Settlement systems close at 5 p.m. Nordbank's confirmation desk had already countersigned. The facility was live. I said to Richard, "What do you think they know?" He said he'd been reviewing the forward commodity curves. He said the 18-month aluminum strip had inverted that morning. He said that's our primary margin hedge. If that's inverted, someone thinks supply is going to flood. I said, "You think Nordbank's seen the same inversion?" He said, "I think they've priced it." I did not say, "You should have called me before 3:54 p.m. I did not say, "This analysis should have been in Thursday's briefing." I said, "All right, let's monitor." Richard said, "Do you want me to escalate to the board?" I said, "Let's give it 24 hours." That was the second decision. The rollover was the first decision. Both decisions were mine. On Monday, September 17th, the aluminum spot price dropped 11% at the Shanghai Open. By London Open, it was down 16%. By New York close, 22%. Our margin calls were EUR 290 million. We had EUR 470 million in available liquidity. We met the calls. On Tuesday, September 18th, I contacted Nordbank to request an increase in the facility. They declined. I contacted our 4 other relationship banks. 3 declined immediately. 1, Deutsche Handelsbank, said they would review. On Wednesday, September 19th, the commodity curve continued downward. Additional margin calls, EUR 385 million. I authorized drawdown of the Nordbank facility to meet the calls. On Thursday, September 20th, Deutsche Handelsbank declined. On Friday, September 21st, the CFO convened an emergency liquidity committee. I presented the position. We had drawn the full Nordbank facility. We had no additional committed liquidity. Margin calls were continuing. We had, at current rates, 9 days of liquidity remaining. The CFO asked me why I had rolled the Nordbank facility on September 14th. I said, "It was a routine renewal." He said, "At an elevated rate." I said, "The rate was consistent with market conditions." He said, "Did you conduct threshold analysis?" I said, "No." He said, "Why not?" I said, "I did not believe it was required." The CFO asked if anyone else had been consulted. I said Richard Stannard called me after the rollover was complete. The CFO asked what Richard said. I said Richard thought Nordbank might be positioning based on forward curve analysis. The CFO said, "And you did not escalate." I said, "I decided to monitor for 24 hours." The CFO asked Richard to join the call. Richard confirmed the timeline. He confirmed he had called me at 4:09 p.m. on September 14th. He confirmed he had recommended escalation. The CFO asked Richard why he had not escalated directly. Richard said, "Martin is group treasurer. Liquidity decisions are his mandate." On September 26th, the company announced cessation of trading. On September 29th, administrators were appointed. Estimated creditor loss, GBP 1.2 billion. Staff redundancies 140. I was dismissed on September the 27th. I was not asked to remain for the administration process. I was not charged with misconduct. The inquiry found that I had acted within my formal authority, but had failed to apply appropriate judgment. I have read that phrase many times. I have tried to locate the moment when judgment should have been applied. Should it have been applied when Sarah called at 3:51 p.m.? Should I have said, "No, I will not authorize this. I need to review the rate trend first"? Should it have been applied when I saw the rate on the confirm template? Should I have paused? Should I have opened a second screen? Should I have called Richard before I entered my password? Should it have been applied at 4:11 p.m. when Richard said Nordbank knows something we don't? Should I have said, "Stop, reverse the rollover, invoke the cancellation clause"? There was no cancellation clause. I checked. In year 4, I obtained the full facility agreement. I thought perhaps there was a clause I had forgotten. A 72-hour cooling-off provision, a material change escape. There was no clause. Once I entered my password at 3:54 p.m., the rollover was binding. I think about the password. I changed it every 90 days. Company policy. On September 14th, the password was the name of my daughter's university and the year she graduated. I typed it without thinking. I have asked myself, if the password had been longer, if it had required a numeric sequence and 2 special characters, if it had taken me 15 seconds instead of 3 seconds to type, would that have been enough time to stop? The conference organizer sent a follow-up email yesterday. She said they are expecting 400 delegates. She said there is strong interest in the session. She said several attendees have specifically registered because I am keynoting. She said, "We know your perspective is invaluable. I will tell them what I have told you. I will say, I executed a routine rollover in 3 minutes and 11 seconds. I will say, I did not apply threshold analysis because I did not believe the action was strategic. I will say, the failure was not in the execution. The failure was in the categorization. I will say, if you cannot distinguish administration from strategy in real time, your protocols are incomplete. I do not know if that is true. I have spent 6 years trying to determine if better protocols would have changed the outcome. I have not determined that. But I am the keynote.